Assalamualaikum warahmatullahi wabarakatuh. I'm Wanswala binti Razali as the first presenter, and we are going to present our group research entitled Macroeconomic Factors Stock Market Development in Malaysia. Before we go any further, a stock market is a compilation of markets and exchange in which day-to-day activities including such the purchasing, selling and issuance of company shares are publicly traded. All these economic activities are carried out through institutionalized formal exchange or over-the-counter marketplace that follow a number of laws. Stock markets play an essential role in economic success by fostering working capital formation and sustaining economic growth. Organizations and governments can collect money by issuing new shares into the stock market in order to raise capital from customers and the general public. Each country has its own stock markets and publicly listed businesses. In 1973, Malaysia decided to create its own market and exit the long-standing joint venture with Singapore. It was known as Kuala Lumpur Stock Exchange before changing to Bursa Malaysia in 2004. Next is problem statement. The volatility in stock market sales has been a big focus in developing countries like Malaysia. Malaysia's stock value fluctuated from 2014 until 2018. In 2015 to 2016, the stock market dropped as a result of global financial events such as Greece's long-term monetary shortage, which led to the country's default, and China's stock market crisis, which began in the same month. When a country becomes overly dependent on the stock market, it will suffer negative consequences because if one of the stock market's determinants fails, the country will be put in a bad position and it is overly dependent on the stock market resources. Next is research objective. As general, the research was conducted to determine macroeconomic determinants of stock development in Malaysia. As for specific objective, the first one is to identify the factor of macroeconomic determinants in the stock market in Malaysia. Second one is to determine the relationship between macroeconomic determinants in stock market development in Malaysia. And the last one is to propose the ways to solve the stock market price in the future. Next is significance of the study. The purpose of study helps in economic development by mobilizing savings and linking them into productive investment for the growth of industry and commerce. This research typically refers to an inspection of the important relationship between stock market output and independent macroeconomic variables. This research is significant to policymakers, government, consumers and fund managers to use this knowledge to help them decide whether they should sell or buy a commodity on the stock exchange and be involved in the market actively.
The macroeconomic variable consists of literature review based on the topic and finding of the dependent variables stock market development in references to the previous studies. The results show that there are positive and negative in each of the dependent and independent variables. The dependent variable, which is stock market, can affect the fluctuation to a variety of circumstances ranging from various economic indexes to the publication on new information. Interest rate also have the positive and negative result, and the rise in interest rate encourage investors to choose the best choice for their investment structure in the capital market, which is fixed income securities. For the inflation rate, if the inflation rate in a country is high, it will affect or reduce the number of investment because of the income of investor due to lower purchasing power and depreciation of the country currency. The impact of FDI on stock market can lead to increased inflow of positive and negative of stock market expansion. The exchange rates also show the result of positive and negative that can cause major changes in the value of multinational companies' international activities, which can lead to low or high profitability on the stock price.
The next is conceptual framework. It is to examine the relationship between stock market development and macroeconomic factors such as interest rate, inflation, foreign direct investment, and the exchange rate. This model shows as stock market development equal to beta naught plus beta 1 interest rate plus beta 2 inflation plus beta 3 foreign direct investment plus beta 4 exchange rate plus error term. Which is hypothesis. The first is stock market H0. There is no relationship between all independent variable and stock market development in Malaysia. H1, there is a relationship between all independent variable and stock market development in Malaysia. Second is interest rate. H0 is beta 1 equal to 0, which is there is no relationship between interest rate and stock market development in Malaysia. H1 is beta 1 unequal to 0, which is there is a relationship between interest rate and stock market development in Malaysia. The third is inflation. H0 is beta 2 equal to 0, which is there is no relationship between inflation and stock market development in Malaysia. H1 is beta 2 unequal to 0, which is there is a relationship between inflation and stock market development in Malaysia. The fourth is foreign direct investment. H0 is beta 3 equal to 0, which is there is no relationship between foreign direct investment and stock market development in Malaysia. H1 is beta 3 unequal to 0, which is there is a relationship between foreign direct investment and stock market development in Malaysia. The fifth is exchange rate. H0 is beta 4 equal to 0, which is there is no relationship between exchange rate and stock market development in Malaysia. H1 is beta 4 unequal to 0, which is there is a relationship between exchange rate and stock market development in Malaysia. The collected data is interest rate, inflation, foreign direct investment, and exchange rate. It is to analyze the determinants of these variables on stock market development. We decided to choose quarterly data from 2012 until 2018 in our research. We do quantitative research because all the data are obtained from quantitative data, and we use secondary data to find our research data. We found all the data information from a variety of online sources such as World Bank, Economic Data, Bank Negara Malaysia, and KONOMA. Is measure of the analysis. First, descriptive statistic. It is short descriptive coefficient summarize a data set which can represent the entire population or a portion of it. Second is correlation. It is refer to the strength of a linear relationship between two quantitative variables. The third is ordinary least square. It is used to calculate the correlation between one or more independent variables and a dependent variables by minimizing the sum of squares in the difference between the actual and predicted values of the dependent variables, which is represented by a straight line.
This is the result of descriptive statistics in mean, median, maximum, minimum, standard deviation, skewness and kurtosis for 30 observations for the stock market development in Malaysia, involving data quarterly from 2011 until 2018. The mean is the average two or more number. The mean statistic for the stock market rate is 39.30. Meanwhile, the interest rate, inflation, FDI, and exchange rate are 1.67, 2.26, 3.31, and 3.62 respectively. The median for stock market is 4.42. Maximum, mean, and minimum are 4.47 and 31.77. The standard deviation shown for the stock market, which is 3.54 and 0.76 for inflation rate, that show the highest for each independent variables. Its skewness needs to be a normal value if the number between -3 until +3, and the stock market show the negative value, which is -0.56. The FDI shows positive value of skewness, which is 0.50 other than variables. For the kurtosis, the stock market is 2.16, which is a platykurty or negative value due to lower values from value +3. And FDI show a leptokurtid or positive value, which is 3.12. The correlation used to examine the strength and direction of the linear relationship between two variables or to look at the net strength between continuous variables. A positive correlation has a value of 1.0, whereas a negative correlation has a value -1.0. There is a strong positive correlation for all independent variables in connected. When the stock market increases, the other variables will increase. Another positive correlation for interest rate and inflation with 0.94, interest rate and FDI with 0.97, inflation rate and exchange rate with 0.98. Next, also the positive correlation between inflation and FDI is 0.96, the inflation and exchange rate is 0.94, and FDI and exchange rate with the positive correlation with 0.96.
I will present about regression analysis, which is RLS. Based on the equation, the value of SMD is 40.24749% when interest rate, inflation, FDI and HSA are zero. If the interest rate is increased by 1%, SMD will increase by 0.938356%. It shows that the coefficient has positive relationship. If the inflation rate increased by 1%, SMD increased by 3.744776%. It shows that the coefficient has a positive relationship. If FDI increased by 1%, SMD will decline by 2.01498%. It shows that the coefficient has negative relationship. If the exchange rate increased by 1%, SMD will decline by 3.964348%. It shows that the coefficient has negative relationship. Next, for this statistic. The table above shows the value of this statistic. This statistic must be greater than 2 and for p value less than 0.05. All the results show a significant relationship between dependent variable and independent variable are square. Based on the table, 83.6345% of dependent variable can be explained by the independent variable. The other element that is not included in the analysis is explained by the remaining 60.3655%. The higher R square indicates a better fit for the model. For the F statistic value is 34.49521, means that the independent variable has a significant relationship with the dependent variable. Lastly, Darby-Watson statistic. The value of the Darby-Watson statistic, which is 0.472233, there is positive autocorrelation. Conclusion. The objective of the research is to identify the factors of macroeconomic determinants in the stock market in Malaysia, which are interest rate, inflation rate, FDI and exchange rate. These variables are vital for checking whether this macroeconomic variable have a relationship or give an influence on stock market development. As a result, it shows that the independent variables has relationship with stock market development. Next, all the results show significant level. Firstly, interest rate rise, demand for deposit rise when people go to investment. Secondly, the country is control and manage inflation in order to maintain monetary recovery. Thirdly, FDI aesthetically affected the stock market expansion and emerging market when companies require resources and expertise. Lastly, exchange rate reflect the country economic strength. When a country currency weaken, its exported goods become less expensive worldwide. Lastly, as for the recommendation, government should play a role in ensuring the economic activity is always stable and strong by constantly monitoring the stock market. Government should be capable of controlling and regulating the FDI flows in order to tackle local economic and political issues. And the last one, government should forecast exchange rate movement by collecting factors that may affect price movement and developing a model that relates these variables to the exchange rate.